Good day, fools. I'm Motley Fool Canada Chief Investment Advisor Ian Butler, and today we're here to provide further insight into a company that appears as an official recommendation in several of our Canadian services, as well as our global partners offering. Joining me is fellow Canadian Dan Matlow, who serves as the CEO of Toronto-based software provider Vitalhub. Dan, welcome.
Thank you for having me today. Welcome.
Awesome.
I'm excited to be here.
We're keen to hear the story. So let's just jump right into some questions here. The company Vitalhub has had a very acquisitive past. The size of the acquisitions have certainly ramped up in recent years, and I've followed the company for a couple years, and just given the changes that occurred, it's actually become kind of hard to throw a blanket over what Vitalhub does. So maybe we'll just get you to tell the story. You can go back as far as you want in terms of relevance, but just to get us up to speed on what is Vitalhub?
Yeah, Vitalhub is a brainchild that I've had for numerous years in terms of the marketplace for healthcare IT software and what I would call government funded based healthcare. But my experience in healthcare goes back to 1996, and in the first 10 years was working for a venture capital startup. And we were working primarily, I was a Boston-based company, I was in Boston, and it was all US-based healthcare. So we spent 10 years that and understood what that landscape was and how it worked and all the things that that came with it. And that company was eventually sold off to OpenText, which got a good experience in the M&A market there in terms of how things work. And as a young man, it was a great introduction to that world. And then I got entrepreneurial again and started a company called MedWorks, which was focused on Canadian healthcare IT software. Very big difference between the government-funded based healthcare system and the U.S. healthcare system. And we went public and got exposure to the public markets there. And then we started expanding outside of the Canadian marketplace. And we saw a lot of similarities between what MedWorks was at the time and other companies that we would partner with in the other geographies of Australia and the UK and some European entities. But we saw that it was primarily being serviced by these smaller cottage type of industry based companies, $3 to $8 million in revenue maybe, and the odd time you'd get higher than that and sometimes lower than that, that were really servicing those geographical or those different country centers. In the back of my mind, I always thought this is a good opportunity to have a consolidation play from an economic perspective and really bring all these products together to offer a more comprehensive solutions to those customers. And by combining forces, having a big enough target market TAM to go do that. So eventually MedWorks was a really successful exit for us. We did well, but we kept the technology pure and we never really did any M&A with that. So as soon as MedWorks was sold, took a little bit of time off and we worked for the private equity firm that bought us and got some good, more operational private equity experience with it. And off we went to start Vitalhub with really the purpose of being a consolidator and doing acquisitions. And I think we've done well over 20 since that time. And focusing on some synergistic companies that we could go to market to. And, here we are 9 years later, and the investment thesis seems to be working, and we're excited to get to the next level.
Yeah, it's definitely started to snowball from my perspective. So how internally, you started Vitalhub as yourself and a small team, I assume. How has the internal capability of the firm sort of developed? So to not just source potential acquisitions, but then integrate once that deal is struck.
Yeah, I think I guess we built up that count in terms of close to 700ish employees at this stage, and right off the bat we had some good operational experience to that, but we were small in doing that. But we've backfilled at the corporate level with some really good skill sets that have had private equity and M&A experience in being able to integrate companies, and we developed a pretty good methodology to do it. We think like a private equity group, and we're very metric and driven in methodology. So we're happy with what we've done to bring that together to build that team up. At the core of what we've done is we've also put together our own development lab in Colombo, Sri Lanka, which allows us to really build up a very strong technological team at a cost-effective basis. That's allowed us to develop these products a lot more effectively.
And is that one of the key advantages when you do an acquisition? You're able to bring that sort of lower cost base on the technology side?
Yeah, it is a little bit of the secret sauce of where our cost element can be. But I'd like to think it's just a little bit more than cost. Is we can also get our products a little bit more innovative and get them sellable so that we can bring them to market a lot more effectively, and we have the tools to go do that a lot more effectively.
Okay. So would you say that there's anything unique, just getting back to the people element and attracting and keeping talent? Is there anything unique that Vitalhub does offer folk to stick around or come through the door to begin with?
Yeah, I think people like healthcare. I personally am pretty passionate about healthcare and a lot of the work that we do for our customers. Automation in healthcare is something that's needed. The amount of patients throughput that go through government healthcare is huge, and it only gets and continues to grow as populations expand. And our ability to put the capital infrastructure together and to have the skill sets there that can service those patients keeps getting stressed on the system. So better processes and more automation that can be used so more patients can be seen at a high quality of care is something passionate to me in terms of driven. And we've all experienced what that's all about and being able to go to these healthcare organizations to do that. So there's always a little bit better we can do and always a little bit better. And I personally have been in, as 30 plus years and 20 years in government healthcare, and we don't think that there's been improvements, but, there's definitely been improvements. We got a long way to go, but, digital processes have been adopted in our world, and we look to continue to improve that. So we like to offer our employees, we want them passionate about that mission statement and passionate about growing a company, and our customer base is challenging to serve, but we do a good job at it, and we got some good people, and we like to promote a good culture to keep those people.
So as an outsider, you go into a medical facility and there's still lots of paper and pens and whatnot being used.
Still some paper and pens that are being used in there, less and less of what it is, but we're also starting.
Are we in the fifth inning of the evolution, or where are we sort of in the?
Yeah, probably government healthcare, maybe like the fourth, fifth inning. But the game keeps getting extended beyond 9 innings, right? With new ideas and new AI and new things that keep coming into the markets, right? In terms of, I keep telling my wife at home and other people is it doesn't stop. Right? You got a human body. We're never going to be, we're immortal. We're always trying to figure out new ways how to get us to live longer and live things, and how does technology help in those regards, right? So there's always going to be new ideas and new ways that can go. So it's a never-ending market. There's more ideas and there's capital to spend on those ideas right now, which is a little bit unfortunate. But yeah, you can never catch up to it. And government funding, government institutions create some challenges in terms of speed and adoption and so forth that go along with it. But there's lots of ways that we can improve that through digitization still to come and still remain.
Awesome. So again, back to the acquisition strategy. There's other companies in the Canadian investment universe that sort of follow this roll-up strategy, if you will, on the technology side. Are there any that sort of stand out to you that you try to almost pattern yourself after it, or greatly?
Yeah, I've been a good student of all the different methodologies, from the constellations and the Enghouses and the open text and the Descartes of this world. I like to think the closest one would be the Descartes model. That's a logistics platform. It's all in the same domain, the same vertical, looking to expand on an international footprint, and assets are bought synergistically to a degree, but always with the economic fundamentals at the core of what they do, and looking to take things to the next level where it's done. But always having a focus on the financial statements and what those things have to do in cash and production in terms of driving that. So we like to think we're good capital allocators. We're good operational people, but we also got a little bit of a brain of what we want to buy and a synergistic value, and we want our customers to be able to expand to some degree. So that's very important to us.
Awesome. Is there, on the competition front, is there sort of an 800-pound gorilla in your sphere, or is it more? Is it not like that?
I don't think in the government-funded healthcare there is an 800-pound gorilla. I'd like to think maybe we're a 100-pound gorilla looking to become an 800-pound gorilla at this point, but we were probably a chimpanzee a little while ago, and maybe a teenager gorilla at this point. But we're trying to grow up and lift some weights and beef up and trying to become that player.
I actually don't know if an 800-pound gorilla is even very big, but
I don't know.
You got the reference. That's right. Equity issuance has been sort of the primary financing tool. Are you at a point where that can maybe shift? You're generating free cash flow now internally.
Yeah, we've been generating free cash flow for a while now, and it's continuously have grown, and we expect it to continuously grow. It just hasn't grown enough to really meet our needs in terms of the amount of acquisitions that we signed in. So we could never scale enough with our free cash flow to get to the size that we want. So it's been a combination of using our free cash flow and our acquisition, and what we've done from an investment raising perspective that's really funded on us. But we're still sitting, north of 120 million of cash that we've had, and we still are generating cash. So our expectations are that should take us to a new level, and we're looking to get there.
Great. Is debt a consideration at any?
We have debt. We have the availability of debt, and we will use it periodically as we see not. But we're not big debt people here, both at the board level and our level in terms of a public entity. I think as we get a little more meat on the bone and size, that lever can be played a little bit more. But we don't feel we're totally there yet.
And I was going to ask this in a couple questions, but that's a good segue. So I've known about the company for a few years, and one of the things that jumped off the page to me when I first came upon it was Francis Chen as the chairperson on the board. What sort of involvement in sort of the more operational aspects does he have, if any? And I guess talk about the board contribution to the company's strategy.
Yeah, from the Shen perspective, we both have Francis and Tony Shen that are on our board, and I guess it's getting close to 6 years or so. So far, this seems like yesterday that he got told about us through somebody, and he was the former founder of Astra Technology, which again was a consolidator in the telco space. Until it sold off to Mitel, so a lot of familiarity with the telco space, and he always said, God, I wish I could have the high margin based business of software, and it's so great. And he studied all the consolidation models, and he walked through the door, and we hit it off. I was like a little surprised, and we hit it off, and they said, hey, we like your model, and we'd like to invest, but we think we can produce some good input into what your organization is about, and can we have board seats and so forth. And we did it, and it turned out to work out really well. A lot of good, it's always nice to have some smart people to debate with, and some people that have been through this, and they've been very supportive, and we've exchanged a lot of different ideas, and they've exposed us to other people such as Alan Brett, who's like the CFO of Descartes. I mentioned them before. People who used to be the CFO at Astra previously to that. So we've been introduced to some good people, and some good ideas and operations. We've adopted some of them, and some of them I've given them a bunch of ideas, and it's worked out well so far. And I think the return of investment that they've made, and all the investors since that point should be happy with where that's come from. So I guess the proof is it worked, at least to date it has.
Awesome. So through your conference calls and whatnot, clearly $100 million in annualized recurring revenue, ARR, is sort of has been a target. You're almost there. What sort of growth rate can we consider? I know it's hard given the acquisition game, so it's sort of hard to frame, but what can we sort of think?
We like ARR. We want ARR, but we don't want it at all costs. The bottom line is there, and we really look at the other side to drive our fundamentals of what our business is about. But we've been very successful with ARR, primarily through just being able to support our customers and cross-sell them a little bit more effectively. So it's just things that we've been focused on. But it's been I don't know, 14, 15, 16%. It's going to be hard to sustain that with the denominator. It's probably going to be more like 10, 11, 12% as we go forward on doing there. But, we work all of our companies on the rule of 40, and we think that's important to have, and we've done pretty good at executing at that.
And you've made it pretty clear that a recent acquisition, or maybe two, is going to probably lower the company's overall margins for the next little bit.
Yeah, I think on a percentage basis, we've made that clear that they're on the bigger side, and we have some work to do with them, and we've been hard at work over the last, I guess, couple months, and continue to focus on that. So we will we expect that to start rotating as we get into the early parts of next year and trying to get back into our traditional margins.
So it's 2025, so I have to ask an AI-related stream of questions or whatever, and Constellation did their AI day the other day. This is maybe what you're talking about before, about the number of innings just keeps expanding. How is AI come into the business? How is it impacting the business? Is it a threat? Is it an opportunity? Is it all of these things?
Yeah, I think it's way more of an opportunity than a threat, right? Every time we acquire a company, we acquire, 40, 50 customers that are using our products to run a process, or we have a data analytics platform that they're using, or we have reports and analytics that we offer off of all of our processes to do that, right? So I think AI presents an opportunity to mine that data a lot easier than your traditional way to do that, and get insights quicker and so forth by putting AI layers on it. So I keep telling our staff is like, we need to monetize our data. We own so much data that we have that we run through those processes, and the tools are coming out there to put AI on top of it, and we think that's an opportunity for our customers to get better value for our products, and I think they would financially would pay for those values that would come across of it. So AI, to our perspective, is other modules that can be added to our products that I think our customers would pay for if they're getting indeed value that come associated with it. So it's important for us to know which products need to get AI and which ones have lower hanging fruit, and how our customers would be willing to monetize that. And that's what we're going through right now.
Awesome. Okay, I'll just finish up. What's the market missing about the Vitalhub story? What would you want to put in front of investors?
I think we sort of talked about it with the gorilla before, right? I think it's it's had a pretty good uplift in its stock, and people go, did I miss it, or is there still opportunity to it? But I still think we're well early in the game. We got 90 million of recurring revenue. We have a lot of capital that's there, and we have the infrastructure to do it. If you believe in our track record and our ability to get to the next level, then you should become a happy shareholders and hopefully wait for us to get to the next level. So I think when people get you buy it $3-4 a share, and it goes up to $11 a share, saying, okay, I'm done with this thing. But I think we still got a long way to go in terms of what the model can do, and how it can play out, and where it can go. Nothing goes up in a straight line, and it's those investors that believe in the model, and that's sort of what I want to stress with the interviews, is the model is solid, and it might get some bumps in the road, or it might go over and above what the model can do. But if you believe in the model, like many have in other consolidators, and you believe in our model, it's just join on for the ride, and hopefully everything is positive, and that's where we want to get to.
And that's certainly the message that we try and put in front of our members every minute of every day, really. We're in these companies for the long term. We want to let management do its thing, work the model, and generally can make for a big payday at some point down the line. Yeah. Okay, that's fantastic, Dan. That's just a quick run through, great overview of the company, and we'll leave it there.
Thank you. Thanks for everyone to have me. And sometimes if there's any new investors or new ideas, our team is always available to answer questions. We have a lot of analyst coverage that's out there if people want to get some interest in what we're about. And the analysts, overall have done a great job in terms of understanding our business model and what it goes for. And I'd just like to, to thank your listeners for joining in today, and appreciate, let us tell the Vitalhub story.
Awesome. Much appreciated. Thanks, Dan.
Okay. All the best.